be joined again by Andrew Johnston, who is one of the co-founders of TrueCore Capital. Andrew, welcome back to stream.
Yeah, it's great to be back. It was a lot of fun the first time, and looking forward to.
Well, so that's what was really interesting, right? So, and I encourage everybody to check out the previous video with Andrew. But after that video, after we were done recording, Andrew and I were just talking offline, and he brought up something incredibly interesting, something that I hadn't heard before. And given that we're recording this in the first week of November, something that's incredibly timely. So Andrew, let's go ahead and loop the listeners in on what you and I were talking about at the end of the last recording session.
Sure. So to anybody listening, you'll probably see it pop up at your local dealership. Many finance companies tout this, but we're talking about Section 179. Basically, to put it in layman's terms, any equipment that you finance for your business, for business use, you can apply against your taxable income for the year. So, for example, let's just say you have a $100,000 excavator that you're looking to buy. You have $100,000 of taxable income. If you're using the excavator 100% for business use, your taxable income is now washed. Basically meaning that if you're in this right tax bracket, you could save up to $35,000 on your tax bill this year.
That's unbelievable. And now I wasn't aware of this. Now, granted, I don't operate a fleet. However, I am friends with and do a lot of talking to people who do operate fleets. And this doesn't come up often. There's a lot that they tell me, in terms of taxing and how they reduce their tax bill and things like that. But this has never come up. Is this something that's relatively new, or has this been on the books for a while?
It's been on the books for a while. It is a government incentive specifically for small businesses. There are some codes that keep it in the small business realm. Like I think off the top of my head, you can only finance a certain amount of equipment or apply a certain amount of equipment to this code. So I think that number is a little over 2 million with a total of $1 million tax write-off that you can apply. However, from a timeline standpoint, this has been around, at least to my knowledge, for the last 10 years or so.
Wow.
So it is a powerful tool. A lot of accountants are very familiar with it now. So you should definitely contact your tax accountant about it.
And I think, so been on the books, let's say been on the books for 10 years. However, the market that we were looking at in 2011, 2012, 2013 is far different than what we're looking at 2020, 2021, 2022. And I think I certainly from our end, and I'm confident your end too, there is a little bit of sticker shock going on in the marketplace that we haven't seen recently. So here's an opportunity for, if you're looking to purchase, but you're getting some of that sticker shock purchasing anxiety, here's a great way to write off a huge chunk of that if you get your purchasing done by December 31st.
Yes, absolutely. I think most people, if you Google Section 179, you'll probably find a few calculators that say, hey, if you're purchasing a $100,000 piece of equipment, it's really $65,000, simply because you're going to realize that $35,000 at the end of the year in tax savings. That's why momentum for this tax code starts picking up around this time, because this is real cash. Instead of buying in January, realizing your tax savings in January of next year, this is now real cash happening right now.
That's really incredible. Have some of your recent applicants, have they brought this up to you? Have you brought this up to them? Just like, by the way, so this is available to you. Maybe if they're on the fence, this is something that could convince them to go ahead and pull the trigger and make that purchase.
Yeah. So we try to bring it up on every conversation, especially as we move into Q4. Not as a sales tool, even though it is powerful and effective, but more of a real life tool.
Yeah.
Our goal, as always, is to provide financing most cost effectively to all of our applicants. But at the same time, we want to be partners in their businesses. So if we have this knowledge that there's something powerful like this that can help them for now and for the future, we want to let them know. So we try to push this as much as we can.
Awesome. Anything else on IRS Code 179?
Yeah, there's a few things. One, I had this in my back pocket. I got to say it. I'm not a tax accountant, so there are eligible and ineligible assets. Most things that are used in the course of business, trucks, equipment, heavy equipment, light equipment, most of that stuff is applied, but please talk to your tax accountant on your specific situation. And And that being said, I also want to give you some tips that new and used equipment are both okay. It just has to be new to you, which is I found interesting as I did some of my research. And then also be careful about percentage of business use. So the one thing where people get hitched up on is, if you're buying an 18-wheeler or a Class 8 truck, you're probably going to be using that 100% for business. But if you're buying, I don't know, let's say a Tesla, and you're using it 51% for business, you can only take 51% of that purchase. So there's a few tips. Definitely consult your accountant, but it is extremely powerful as we went over.
Yeah, but for a lot of the financing that you guys do is more in that heavy duty equipment type of financing. So I would think that the people who you help out, I think they're gonna be on the hot. They're like, neither of us are tax accountants, of course, but I would imagine that the people who seek financing with TrueCore are in the higher end bracket of the rebate than some of the other people who are going to take advantage of it.
Absolutely. I mean, when we get applicants, almost every time it's 100% business use. So we typically don't even mention the percentage of business use when we talk to people, but if there is even like a gray area, we like to, be full over the table, advise them as appropriately as we can, and make sure they know what they're walking into.
I'm so glad that we had that conversation, because I really didn't know about this. And I think this is just such a huge benefit to the people in today's market who are looking to buy heavy duty equipment.
Yeah. And last thing, don't mean to interject, but
I
think
please.
You mentioned it early, but super, super important point for anybody listening, has to be purchased and in service by December 31st. Key point being in service.
And again, that goes to in service for you. So it's like if you, let's just play the game, right?
Okay.
You own a fleet of trucks. I'm an owner operator. I buy one of your used trucks for myself.
Mm-hmm.
I have to be using the truck that you sold me by December 31st to get the tax credit, right? It doesn't count that you were using it up until the 31st, but we didn't close until January 3rd. I don't get to apply, right?
100%.
Okay.